Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as computation of total income. We're going to do question number 18 today. We're doing question number 18. Assessee is Mr. Suhas Desai. Previous year is 2010-2011. Assessment year 2011-2012. Particulars rupees. Right, let's start. Mr. Suhas Desai submits the following information pertaining to the year 31st March 2011. Now, they've given you income from salary. Income from salary. First, basic salary. Basic salary is 5,000 rupees per month. So for the whole year it will be 60,000. Next, dearness allowance. Dearness allowance is 3,000 rupees per month, so 36,000. Next, bonus. Bonus is given at the rate of 20% of basic plus dearness allowance. At the rate of 20% of basic plus DA. So that is basic plus DA is 96,000. Someone please find out
19,200.
how much? 19,200. Next. Employees contribution 12.5% of basic and DA to statutory provident fund, right? Employees contribution to recognized provident fund is 12.5% of basic plus DA. Someone please find out 12.5% of basic plus DA. 12.5% of 96,000. Someone please get me that. 12,000. Now guys, when we were doing this chapter, I had explained to you that when you're contributing employers, this should be employers. Employers' contribution to RPF is exempt to the extent of 12.5% of basic plus DA. Now since this is 12.5%, therefore this whole amount is going to be exempt at the rate of 12.5%. Right, which is exactly 12,000, so the whole amount is going to be exempt. Contribution to RPF is exempt to the extent of 12.5%. Next, interest. They are saying that interest on balance credited to his statutory provident fund. Interest on RPF is given to you as 17,500. Now, interest is exempt to the extent of 9.5%. Since they haven't specified the percentage of interest, we will assume that the rate of interest is less than 9.5%, because had it been more than 9.5%, it would have been specified. So this is exempt at the rate of 9.5%. We'll assume that this interest that he has got is less than 9.5% or is up to 9.5%, right? Next, let's move on ahead. HRA. HRA, house rent allowance he is getting as 10,000 rupees per annum, right? Next, pension. No. Professional tax paid by the employee. He retired from service, opting for 60% of commutation of pension and received 2,40,000 as the only terminal benefit. Commuted pension. He has received commuted pension of 2,40,000. Let's calculate the exempt of this, guys. Can you please see the working note? Commuted pension received. How much has he received? He has received 2,40,000. Percentage received. He has received 60%. Full amount. All this as A, B and C. Full amount is nothing but A into 100 divided by B. Someone please do that. 2,40,000 into 100 divided by 60. I presume it should come to 3 lakhs, 4 lakhs. D. Exempt if gratuity received is C divided by 3. As he received gratuity, has it said he owns a residential house? No, he hasn't received gratuity, right? E. Exempt if gratuity not received. Not received is C divided by 2, that is 2 lakhs. Finally, exempt is minimum of A, C, D and E. A, D and E. Right? So finally exempt is going to be minimum of A, D and E. So in that case, out of the 3, this is not applicable. D is not applicable. So the exempt amount is 2 lakhs. So here you write less exempt 2 lakhs. This is going to be 40,000. Right? So commuted pension is going to be 40,000. Next, he owns a residential house. That's it. Right? This will give you your gross taxable salary. Someone please calculate the gross taxable salary.
1,65,200.
1,65,200 less deductions under section 16A, professional tax 840. B, entertainment allowance. Nil. So 840. This will give you net taxable salary
1,64,360.
1,64,360. Next, let's move on ahead. Second, income from house property. Reasonable relatable value. Right? Now they've given you that fair rent. The fair rent is given to you as 30,000. Next, municipal value. Municipal value is given to you as not given to you. So hire of A and B 30,000. B standard rent. Lower of C and D 30,000. Next, rent received. Right? Has he received rent? He owns a residential house which is used for his own residence. Gross annual value. Higher of 1 and 2. That is going to be 30,000. 4. Less municipal taxes. He's paid municipal taxes of 3,000. Net annual value. This is an SOP, so its net annual value will be nil, since the house is being used for own residence. Next, less deductions under section 24A, standard deductions, right, and D, interest. Since there is no NAV, the standard deduction will be nil. Repairs for house not to be considered, insurance for house not to be considered, interest on loan taken for construction of the house 7,000. So interest is 7,000. This is 7,000. So your net income from HP is going to be 7,000 negative, right? So you will get gross total income or gross taxable income. Someone please help me get this. 164 and that is 7. So 167, right? Next, less deductions under chapter 6A. Now let's see what all has he done. The only thing that the employee has done is that he has contributed to RPF, Recognized Provident Fund. That's your 80C investment. Contribution to RPF. Both the employer and the employee have contributed same amount. We had already found out that he has contributed 12,000. Right? So net taxable income. Someone please subtract this and tell me how much is this? 145,360. Right? That finishes that up. We'll stop this here for the day. Thank you very much.